Welcome to the Rim Break Rodeo. We hope this video helps.
Open your OKX account and enable the margin trading feature in settings. Read and accept the margin agreement to understand risks and requirements. Transfer 1,000 USD from your spot wallet to margin to provision collateral for trades. The transferred collateral becomes your initial margin and supports leveraged positions. Choose isolated or cross margin depending on risk tolerance and exposure. Isolated limits risk to one position, while cross shares collateral across positions for flexible maintenance. Select a trading pair and choose leverage, for example 5x on BTC/USD. Remember that 5x leverage increases both profit potential and downside risk significantly. Set order type, market for immediate fills or limit to control entry price and slippage. Input position size and verify the required initial margin is covered by your collateral. For example, 1,000 USD collateral at 5x creates a 5,000 USD position size. Confirm fees, funding rates, and estimated liquidation price before submitting. Monitor margin ratio and the estimated liquidation price continuously while leveraged. Set price alerts and use stop-loss orders to automate risk management effectively. If the margin ratio drops toward maintenance, add collateral or reduce position size immediately to avoid liquidation. Use isolated margin to contain losses to a single position when appropriate. When ready to exit, close your position with market or limit orders to realize P&L. After closing, withdraw excess collateral back to your spot.
Thanks for watching. Consider subscribing if we helped you.